Tuesday, August 27th, 2019, Maneco 64, home of alternative economics and contrarian views. Today I'm going to talk about the FT's war on gold. The FT, or the Financial Times of London, of course, is a globalist central banker mouthpiece. After I look at the markets this morning, I'm going to talk about an interesting incident 15 years ago, over 15 years ago, that I had reading the FT, and which made me even more determined to keep accumulating gold at the time. I was already awake at the time to the globalist, how can I say, power and what it was all about. So yeah, I'll talk about that today. Some of you will probably have heard the story, but as I keep getting more and more subscribers, more viewers, and the situation changes as well, as per the globalist war on gold, things are changing very quickly. Central bankers are losing control, and even publications like the FT are admitting that. So that's what I'm going to do today. So it's 7:45 a.m. London time. So let's quickly look at where the markets are this morning. Yesterday we had a rebound after some comments by President Trump. He actually said that the Chinese want to negotiate, that the Chinese called him, I think on Sunday. Chinese denied that, of course, but the stock market rebounded. Gold went back down. Silver didn't really go down that much. Silver stayed pretty strong. And the gold-silver ratio is looking better for precious metals. To the markets. Gold, 1532 right now, up $5. Range has been 1525 to 1534. We got up to 1555 yesterday. So we're still holding above that 1525 level, which I think now will be important support. Silver, 1770, up 5 cents, or a quarter of a. 1778 has been the high, and the low 1762. I'll quickly show you the gold silver ratio chart here. As you can see, it's looking good. As a lot of you know, in a precious metals bull market, silver outperforms, and we need to see this ratio drop to continue to see that happening, and that's a positive. So yesterday is a good day in terms of the fundamentals for the or the technicals for the precious metals bull market. While the stock market this morning pretty much unchanged here. Dow up 9 points, 25,909. S&P futures up less than a point, so unchanged, 2880. Nasdaq 100 future unchanged as well. So it's fairly quiet. The markets are fairly quiet right now. Currencies, sterling is a little stronger, 122.26. Euro unchanged, 111.00. And the dollar's down 0.4% against the yen. Dollar's back below 106, 105.7. Dollar up slightly against the Chinese yuan at 717. Crude oil up 0.2%, 53.89 WTI. Brent is up just over 0.5% at 58.51. Bond markets are getting interesting. The 2s, 10s are inverted right now. The 2-year yield is at 153. That's down 2 basis points. The 10-year yield is down just over 2 basis points at 152.2. Not much inversion, but and some people might argue that's minuscule. But if you look at this little chart here, a year ago, the curve was fairly steep, relatively steep. And then a month ago, the red line, it was still, the 10-year was still above the 2 years. But now it's all about the trend. The trend is becoming flatter to inverted, and this is significant. Goes to show that the bond market is not forecasting a rosy picture for the US or world economy. So the FT war on gold. So back in 2004, I was still working in the city. At the time, I used to work for ABN AMRO Bank. and the department was ABN AMRO Futures in London. ABN AMRO Futures or ABN AMRO Bank bought City Futures back in 1997. City Futures was the futures arm of Citibank. So I've worked for the big banks, and I was going to work in the morning. Train station wasn't too far from my house. I could walk there. It took me 5 minutes. But I had to leave very early. I took the 6:08 train or something like that to London Bridge. And I was on my desk usually around 10 to 7, quarter to 7. Markets in London open at 7 o'clock. That's how it is. And I used to buy the FT at the time at the station and read the paper on the platform. And I always used to like going to the editorial page. I had a quick look at the headlines, and I like looking at the editorial page. And on April 16th, 2004, and how do I remember the date? Well, because I kept the editorial, I cut it, I laminated it, and I still got it. And it says, going gold. And of course, by then I was a gold bug. I'd been buying gold for the previous 2 years, not only buying gold, but looking at what gold really was, the history of gold through the monetary system. I was awake to the fact that people like the FT were controlled by the bankers, central bankers, the globalists already 15 years ago. So it's been a long battle, war, psychological war for me, but I knew then that gold would win because it always does, and paper always loses, right? So today I want to go through this editorial, and then I want to announce as well that I've started a campaign on Teespring store for merchandise, and you can get a mug with this editorial. And the mug says FT War on Gold. It's in my Teespring store. There are other merchandise there as well if you'd like. It helps the channel and it's a bit of fun. After I go through this, I'll go quickly through a couple of articles I've seen in the FT the last few weeks that point to the loss of faith that is ongoing, even by publications like the FT, as it pertains to the current system and central bankers. Because you have to understand, gold is the enemy of central bankers. And that's what it's all about. And the banking system, the fiat currency banking system. So the article or the editorial says, the pointlessness of holding bullion continues to sink in. So this was the editorial, April 16th, 2004. And I even wrote where the price of gold was at the time. It was at $400.65, just above $400. In British pounds, it was around $222. So 15 years later, we're 1,000 pounds higher and over $1,000 higher, right? Keep that in mind. The barbarous relic, as Keynes called it, is crumbling to dust. Well, they've made a mistake there already, because Keynes called the gold standard a barbarous relic. When even the venerable N.M. Rothschild has quit the gold market, and the Bank of France, among the most stubborn of the official gold bugs, is thinking again about its bullion holdings, the end of gold as an investment has come a little closer. So yeah, Rothschilds, they quit the business like in 2004. They used to be part of the fixing, LBMA fixing, but they quit the business back then. So I'll continue. And the Bank of France, actually, they didn't get rid of any of their gold. They still have over 2,000 tons. It will not be before time. The fetishization of shiny yellow metal, decades after it ceased to be used as the anchor of the international monetary system, is a lingering anomaly in modern financial markets. Perhaps Rothschild's last service to the bullion market could be to keep a live gold trader on display behind glass as a reminder of a bygone age, like the former coal miners who now make a living giving tours of defunct pits. So that's the kind of editorial that was, right? The one advantage of gold as a reserve asset is that unlike assets based on fiat money, governments cannot make it worthless by inflating it away. That's right. But in an era of low inflation, and given that independent inflation targeting central banks are the norm across the industrialized world, that risk has very sharply diminished. Yeah, but those central bankers are losing control. They've got negative interest rates, nominal negative interest rates, which is something that you never predicted, FT, and it's something that's killing the system, right? And they go on. Indeed, for both private and official investors, gold is now a rather risky asset with a nil or low return. Well, nil return is better than a negative return, FT. You didn't foresee that. The intrinsic value of gold determined by its use in various industrial processes is well below its market price. Gold does not grow, so its value to any one investor as an asset is dependent on other investors also holding it as an investment. The gold price hangs precariously by its own bootstraps. So I'm sure a lot of people probably got put off by reading this back then and got out of gold, right? Just at the wrong time. For private investors to hold gold on this basis is their own foolish affair. For central banks and governments to hold it as a reserve asset is a betrayal of the public on whose behalf they're acting. Despite recent sell-offs, governments and central banks still hold about a fifth of the world's bullion. Their large holdings relative to the size of the market by themselves make gold particularly ineffective as a reserve asset. Well, go tell that to the Chinese and the Russians and all the other central banks who bought the most gold in about 50 years last year and are continuing to buy gold. The very act of official selling of bullion on any large scale to raise cash will itself drive down the price. This danger was amply demonstrated by the UK's unhappy experience of trying to sell some of its gold holdings. Yeah, because they pre-announced it, FT. Announced in 1999 in a sensibly open and transparent fashion. No, it was stupid. They pre-announced a sale. What do you expect, FT? It wasn't sensible. The sale sparked such a fall in the global bullion price that a group of central banks signed a concord limiting such sales. That has recently been superseded by a new agreement providing for limited official sales. So Gordon Brown actually was working on behalf of the bullion banks. The rumor is that I think it was Goldman Sachs and it was after LTCM. There was a squeeze. Bullion banks couldn't cover back. They would have lost billions. So Gordon Brown pre-announced so that the market would drop and Goldman Sachs could buy back its position. That's what it's about. But the FT doesn't talk about that. Given the pointlessness of holding gold, the speed of its official sell-off scarcely matters unless leaching the gold into the market bit by bit somehow maximizes the return to the public purse by limiting the impact on the price. That would imply some irrationality on the part of the market. But then holding gold is irrational in the first place. Perhaps the central banks are right to go slowly. So yeah, holding money is irrational. Saving, okay. Whatever the speed, the direction is clear. Gold is on its way out as an investment and a reserve asset. 3 cheers for that. So when I read that on the platform, I was like, wow, what the hell, you know? And that's why I kept that. And 15 years later, here we are. Central bankers are losing control. And why do I say that? Well, negative interest rates, nominal negative interest rates. Real negative interest rates, we've had them before. But this is completely new. You're basically putting $100 or lending $100 to a central bank, and in 10 years you're going to get like 98. So while when you buy an ounce of gold, in 10 years you still have an ounce of gold. So no return in gold, but you get to keep your gold. Now the paper assets, which are supposed to provide an interest, they're not providing an interest, right? So the couple of FT articles that I've seen over the last few weeks, one was actually the last few days, not weeks. One was on August 23rd, and it was by Adair Turner, who was once the head of the UK financial regulator. He says central banks have lost much of their clout. And I won't go through the whole thing or else I'll be on too long in this video. So this is what he says at the end of the editorial that he wrote. He says, the truth is that acting alone, central bankers are no longer that important. So this isn't the FT, so they're admitting they're losing the war at central bankers. And then there's this other article here. This is from August 25th from Jackson Hole. FT admits central bankers rethink everything at Jackson Hole. And they say for the world's central bankers gathered in Jackson Hole, there was a sense that things would never be the same again. So there you go. Central bankers are losing control. They don't have any ammunition left after saving their corrupt system back in 08-09. They're left without any ammunition. Yeah, the Fed has a little ammunition in terms of interest rates, but it's not going to work. So 15 years later, gold's winning the war, FT, and I'm holding on to my gold, not because it's a fetish, but because gold always wins against paper money in the end of the day. It might take longer than expected, but yeah, it will happen. It's not a matter of being a prophet or forecasting. It's a matter of common sense. If you enjoyed this video, make sure you hit that like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.